Welcome back to the Accounting Working Group podcast. I'm your host, Stein Smith, and I'm also chair of the Accounting Working Group. And for April 2023, I'm thrilled to be joined by my friend, colleague, Kirk Phillips, who is the managing director of Global Crypto Advisors, as well as doing a whole bunch of other things. Kirk, happy to have you here.
Sean, it's a pleasure, and I'm really happy to be here today.
Awesome stuff, Kirk. And I have to be honest that I just about finished reading Kirk's newest book, and I also have to appreciate the little call out, shout out note at the beginning. Much appreciated. And so to sort of introduce this episode, right? Why don't you give us some background on you, your firm, and your most current book?
Sure. Thanks, Sean. So I would say, I just thought about it that, right now I've been in the crypto blockchain space. Now this is my 10th year. So it kind of blows me away that it's the clock is ticked away that fast. I'm like, wow, this is amazing. It's like basically on or around January the 1st, 2014, or maybe even in the fall of 2013 is kind of where everything started. So
okay.
Somebody asked me about Bitcoin. They said, "Hey, can I have some advice? My husband and I, we want to buy a computer and mine some Bitcoin and make some money." And my first thought was, highly skeptical CPA mind says, not says, but thinks, yeah, like you better go back and get your facts straight because I don't think you know what you're talking about. Well, as it turned out, I'm the one who didn't know what he was talking about. But basically, that one question essentially changed the whole trajectory of my life, for certainly over the past 10 years, and I'd say for the foreseeable future, as far as being in the crypto and blockchain space. So basically what that question led to was I went down the rabbit hole and I wrote my first book, The Ultimate Bitcoin Business Guide. I spent 2014, 2015 writing that. And of course, at that time, I didn't know anything at all about the space. That was just a all around, super deep dive. And I was just really just super curious about the technology and everything like that. That's really how I went down the rabbit hole. And then everything else just kind of cascaded from there, started into, a niche practice working with businesses, individuals, outsourced accounting and tax and stuff like that. And of course, I've done an educational piece, which is how we've crossed paths, and also through WSBA and AICPA and so on and so forth. So I've done just about everything there is to do, I'd say, in the space, including being a DeFi power user and all that good stuff. So, that's probably the best way to sum it up. And so I would say that, so Global Crypto Advisors kind of morphing into Crypto Bullseye.zone. So basically shifting from the kind of niche specialized CPA services really into education / coaching, intelligence and that kind of stuff. So, the education piece kind of inspires me more. So I guess over this journey of the past 10 years, I really have been, full time over that period. I've seen so many people make so many mistakes. It's unbelievable. I mean, and tax mistakes is only one aspect of it, or crypto mistakes is, it's crazy, from security to this, to that, to everything that can happen to you in the crypto space. So that and I've made my own mistakes, but fortunately,
haven't we all?
Minor. Yeah. So because that's how you learn, right? It's like you get stripes and stuff, so earn your stripes and so on and so forth. So that's what really inspires me to want to teach other people so they can accelerate the process and not step into quicksand along the way. So so basically the whole crypto bullseye.zone thing, as far as being educational, so kind of I thought the low-hanging fruit was, let's create a course, around tax. I call it the Crypto Tax Blueprint. And then kind of put it down, and actually got distracted with DeFi and some other things for like a year and a half. And then I came back to it and kind of brushed off the dust. And I was like, wow, it's kind of like a book's worth of material, although it really wasn't. But I really ended up doubling the content. And so basically it started there as a course and then turned into a book. And that's where we are today.
Nice. And as a fellow CPA who's also gotten obviously hooked into crypto, DeFi, tokenized assets, it honestly does oftentimes start with this, it's an interesting idea. Let me try to learn some more. And then, it's 8 months later, 2 years later, 5 years later, 10 years later, and you're all up in it. And so, what I would just comment on there, Kirk, is that the educational aspect of crypto and really sort of tokenized assets at large is really only becoming a more important, right? I don't have to tell you that the overall sort of narrative coming out of Washington and some other places hasn't been positive for crypto over the last half year, 12 months, or some would say ever. And so having
Right.
well-informed, objective sort of third-party educators and just content out there really is super critical. And so I was amped to have a crack at your newest book, and I'm also happy to hear that actually you are in the process of updating some of the courses that you put together for the AICPA previously, right?
That's right. That's
Yeah,
that's right. Yeah. I was
awesome stuff.
yeah, fortunate enough to come along and contribute the blockchain fundamentals course with the to the AICPA in 2018. So that started there, and I've done a number of other things. So it's and I know we're both involved in a lot of these working groups and things like that. So it's great to pay it forward. And of course, the payoff is you're kind of at ground zero for these discussions.
Yeah, absolutely. And so uh targeting back, right? And as of our conversation, we are in the home stretch. We are in the uh ending days of the 2022 income tax season. And so are there any major issues now? Obviously, the whole conversation on taxes and crypto, it's an hours and hours and hours long conversation. But are there any major issues, holdups, problems that you have seen over the last 12 to 18 months or so for either individuals who have sort of dipped their toes into it, or for institutions who have tried to either put crypto on the balance sheet, use it for transactions, and then end up getting tied up in some pretty complicated tax messes?
Yeah, yes, that's a great question. I think you framed it very well, which is that you could go on for hours and hours in perpetuity. Which is why which is really why like this book is really like taking an approach that when everybody talks about tax, they're usually talking about like, oh, how is this tax and how is that tax? And everybody's kind of saying the same thing. My assertion, there's a whole lot more to it than that. And it's kind of the process of going all the way from where transactions originate to their final resting place and being able to have complete and accurate information. And only from there can you apply whatever tax principle to it. Because if you do a sloppy job when you're trying to get your, let's say, your income types into the various buckets, and then you apply a tax rule to it, let's say that's correct, but the information is bad, you're going to come out with a bad result. So you really got to have a good process to manage the whole thing to even get to the point of like, how is this particular piece taxed or how is that piece taxed? That's kind of my whole assertion there. But I would say, I mean, there's so many things here, but I mean, I think we could just even speak to, like the AICPA and the virtual currency task force, which I'm, honored to be a part of making contributions. There are some really super smart people involved in that group. And that's kind of a ground zero for coming up with what are the tax issues, and here's make event letters and suggesting solutions and or identifying and describing what the issues are, and distributing that to the Treasury and the IRS and so forth. So right now there's an 18-page losses comment letter that's coming that's about to be issued for digital assets, right? So
Only 18 pages.
If you just look at this, sorry. Yeah, 18 pages.
Only 18 pages.
Yeah, I mean that's why it's like, and that's one of, I don't know, this is like maybe the 6th or 7th comment letter, and I'm sure I think there's even some more here that are still in the pipeline. But when you look at it and you're like, wow, I mean, it just blows your mind away to think we're just talking about just losses. And to read through that stuff, and if you were like a fly, like to say, on the wall, listening to some of these back and forth conversations, whether it's live or in emails, it's like it would just blow your mind apart to think about all the little nuances and all the considerations. And what about this and what about that? Of course, like many things with digital assets, it doesn't tuck in nicely to the code because a lot of things refers to securities and so on and so on.
Mm-hmm.
Digital assets, crypto is not securities, it's property and et cetera. So yeah, so the losses thing is rather interesting because I think there's probably a lot of chatter going around where people think losses are losses. So whether it's you could have a worthless asset, people think, oh, it's just a loss, or you could have abandonment and people think, oh, that's just a loss. Just like any other real, let's say,
Mm-hmm.
straight up capital, right? From a trade. But it gets more complicated than that. So, a lot more complicated. So there's a lot of issues there. And it really right now, I think one thing that's fairly clear is that let's say your abandonment and worthlessness, for example, just because of the Jobs Act eliminating the itemized deductions on, personal tax returns, that if that, those things would default there, you wouldn't get a
Mm-hmm.
benefit anyway through after 2025. So, so whereas let's say for somebody was actually trying to figure out how do I go about abandoning, which is one of the things we're asking about, what are the elements that you could make sure to check boxes for to say that let's say, made sure that you have abandoned, that you'd abandon the asset, and that kind of thing. And
Mm-hmm.
but really what it would come down to is you would want to potentially not want to do that, because if you wouldn't get a benefit, it would be better just to kind of wait it out, because as a lot of things in crypto, one of the things I've learned in 10 years is anything can happen. It really can. So whereas you think, whereas you think you got an asset that might be worthless, like you never know what could happen. And all of a sudden, a couple of years from now, the thing, all of a sudden it could be some crazy event and people just start going crazy and, buying up the
Bidding it
token
up
and
out
the
of
price
nowhere.
goes
Yeah.
up.
Yep.
Yeah. I mean, I even saw this one where there was like this fraud case. I forget which one it actually was. It was called this Crypto Zoo project. One
Mm-hmm.
of the YouTubers called the other guy out. He did his own like forensic investigation to call this guy out and stuff like
Wow.
that. But in the process of doing that, because it got so much fanfare, these zoo tokens or whatever it was, they actually like doubled or tripled or something like that within a week. And it was like, but the whole point was that this was a potentially like a fraud, and yet people like bought it up. So that's what I'm saying. Anything can happen in crypto.
Absolutely.
Yeah.
Absolutely. Anything can happen and often does.
That's right.
And so, uh, kind of building on that, right? In your conversations, as you had indicated, as you're moving, out of some of the niche, tax and sort of strictly CPA practice into more of a advisory training type of role, are there any, top, I don't know, 2 or 3 issues that businesses are talking about outside of the tax and the volatility, which are going to be issues for the foreseeable future? But outside of that, are there any other business issues or sort of operational issues, that are coming up, more and more as businesses, large and all sizes, are trying to integrate blockchain, integrate tokenized assets into their operations?
Yeah, that's a really great question. And I would say that I mean, certainly from a business perspective, businesses just right off the top of my head, I'd say that, even in the legacy sense, a business is 10 times more complicated than an individual. And of course, that's
Mm-hmm.
just
Sure.
more of a generalization, because you could have really large, Fortune 500 companies and stuff like that. But same thing applies in crypto. Like an individual crypto situation could be extremely complicated, but when a business is using it, there's so many different moving parts. You got to have a balance sheet, income statement, calculate the gains. It's like, there's like a parallel financial transaction that happens with every transaction that doesn't happen with the regular like fiat transaction, right? Because you got to
Mm-hmm.
calculate gain and loss on every single transaction. So you've got, whereas you might have an expense, but then you also have a gain and a loss. You could have income, now you don't have it necessarily gain and loss on that, but it does start the basis clock and stuff like that. So whether you buy equipment, so it's really like just tracking it. And just because the business is more complicated, it just magnifies the complexity of just trying to manage all the accounting, from a business perspective. And
Mm-hmm.
also, So I think that's really, really one of the main things is really just kind of the whole tracking thing creates lots and lots of challenges. Even the enterprise softwares that are focused on businesses, there's challenges there because there's so much tooling that needs to be done as far as blockchain support. Because it's like, I guess the point here is what I've seen is that there's many use cases, and this also applies to individuals too, but there's many use cases where there's not a single software solution that can handle the use
Hmm.
case. So then you
Gotcha.
end up having to really you got to break out all your skills you've ever had as a CPA to try to figure out how to manage it and have good documentation and stuff like that. But one interesting thing, I think we both heard this actually the other day, and I've actually heard this before, but I think it's really an interesting point, is that from your publicly traded companies, I guess, especially because they have to do, they're required to do reporting, quarterly reporting, and so on. That because of the current rules around how digital assets would show up on the balance sheet, it's a disincentive to actually want to get into the digital asset space, simply because that it would be, you would record it and it would show up on the balance sheet the first time, right? And then
Yep.
it's only going to go in the downward direction, right? Because
Yep.
it's basically it's a write down, but it doesn't go back up again. So of course there's some proposed rules and stuff that could change all that, but if that's the way it would stand, it's really interesting. It's the one thing, like, who would think that like an accounting, um, certain accounting scenario could dictate whether or not somebody got into digital assets, an organization, because they might think there's all kinds of great stuff about it. Wow, we could benefit this way and that way and so on and so on. But they're like, you know what? Because of the way we have to account for this, let's just hold off right now. So I think that's a
Yeah.
fascinating insight.
No, yeah, and absolutely, and it honestly does highlight sort of, part one, how important the accounting rules are, and then two, really the real tangible business impact of not having, crypto focused rules out in the marketplace, issued either out of the FASB or the IASB. I mean, all of that does have an impact on the business world, and so really that sort of clarity, and I believe you and I were on the same call. That really, sort of hit me, like, actually, yeah, like having these, or having the lack of crypto focused accounting rules, can be, to a certain level, keeping companies out of this space who would otherwise enter. And so, all of
Right.
that really, I think, is a real indication that some of these policy boards, I won't name names, uh, really are sort of on the hot burner right now to get some of these rules out the door.
Right. Yeah.
I won't
Totally
name
agree.
names, Kirk, and I won't ask you, I won't press you for them either. But but to sort of wrap up our conversation here, right? And obviously we are almost done with the first third of 2023, and it has been a crazy 2023 so far. But if I had to ask you to sort of put out there, I don't know, your top, two, three, four predictions for the rest of 2023, either for crypto, for Bitcoin, or for blockchain at large, do you have any for us?
Yeah, that's a great question. Yeah, I have a couple things that actually just struck me just really this week, between yesterday and today. And of course, it's interesting because it's looks like a 6:21 p.m. Eastern time here on April the 12th, and we've got the Ethereum Shanghai upgrade is about to
Yes. Yes.
activate at 6:27 is estimated. So basically what that means is that's the culmination or completion of the multi-years long process of transitioning from, Ethereum from proof of work to proof of stake. So that's a
Mhm.
very interesting milestone. So we may see some of this in the future with other chains, but it's interesting because the early stakers have been locked up, had their ETH locked up from the end of 2020, and so without any really roadmap of knowing when and whether or not they'd be able to withdraw their ETH. Forget about the staking rewards piece, but let's say the initial capital, if you will, right?
Mhm.
So it's possible there could have been a mistake and all the ETH that was locked up, was permanently lost. But anyway, that's gonna there's gonna be multi-billion dollars worth of ETH that could be potentially unstaked. Of course, it's limited, so it's not going to be like it all dumps on the market right away. But they also, I think it's only represented about 15% of the ETH supply. But I've seen where there's estimates saying that once, all the people who didn't want to take that risk or say, okay, now that this is, now that we have this new upgrade and everything's kind of working smoothly, the staking percentage could go up to 60%. So the supply could significantly contract. And it's already deflationary now, right? So with the ETH supply, so that would be interesting. And so you got that coupled with it 1 year from now in April of 24 is when the Bitcoin halving is going to come along. And so you combine ETH with Bitcoin, the combined market cap on those are like 55 to 60% of the total market cap. So they're the two of those together are dominant. So it's like, okay, this could be like, a convergence here with restricting supply on ETH, Bitcoin halving. We all know what happens there, at least what history has shown, price goes way up. So supposedly like the mining cost would be, one thing I saw was like approximately $40,000, meaning the low water mark would be about $40,000, just, pure cost to mine a Bitcoin. Therefore price should represent the low water mark, the same thing. So meaning that the price would, potentially go much, much higher than that. So you could have these two things shake out together and you could have another, mega bull run. I've heard all these things about hyper Bitcoinization, maybe that kicks off. And I don't really like talking about price too much. I just think it's interesting how these two things are happening here. And just with the events, the kind of the moment in history that's happening today, right as we talk.
Yeah. So, yes, actually. Yeah. Right as we're on this podcast. No, and it's going to be really, really interesting, right, to see how that Shanghai upgrade actually turns out, right? Because I've heard bull cases, bear cases, but I think either way, there's going to be a lot of conversation around taxes, around custody, and around sort of how this impacts other applications that ultimately run on ETH going forward. So it's going to be a really, really interesting time for sure.
And the other thing too, I'd say is, of course we're, it's like ever since Chat GPT came out, it's all of a sudden it seems like AI is everywhere, like in every circle that I'm in, business and professional, it's in the conversation suddenly. And so of course, you've seen that there's a lot of venture capital that's gone into projects that are baking AI together with blockchain and stuff like that. And even the tokens. So both some of the AI tokens plus, startup projects have gotten a lot of traction here. So it'll be interesting to see how this trajectory continues through the rest of the year.
It's going to be fascinating to watch for sure. I can just imagine some of these AI coins paired with the AI trading algorithms that are already out there. It could be extremely exciting to watch either way, right?
Right.
But Kirk, it as always is a pleasure to talk to you, and it really has been a pleasure to have you on the podcast. I will have to have you back on hopefully to the end of the year to sort of piggyback or sort of look back on some of these points here. And Kirk, it was a pleasure having you on. And if individuals are interested in following you on social media, what's the best way to go ahead and to do that?
They can do that by I can, I'm always available on LinkedIn, Kirk Phillips, the CPA, and so forth. And then also my longtime handle is at the Bitcoin CPA, and then of course I got Crypto Bullseye Zone that's out there too. And I'm not actually sure what the handle is because several of them are different. But that's going to be the handle. That the new handle will be the thing to look at. That's probably where I'll be putting most information out.
All right, Kirk. Again, thank you so much.
Yeah, it was a pleasure. Great to catch up with you and talk about this very exciting and fun topic.
All right, Kirk. See you next time.
All right. Bye-bye.